that will cause the price of Bitcoin to go up? This is good. This is an interview he did not long ago at the Bitcoin meeting. I think you should watch this all the way through. He also talks about business at the end of this video. Those of you who are new to the channel should also. What we think about what's going on in the market and what we think will happen next for BTC and the rest of the crypto market is always added to it. You can look at that if you want to. Let's play the video. If your business is a running company, you had to put your extra money into treasuries until January of this year. It wouldn't make sense for an operating company to hold their extra assets in real estate, timber, rights, sports teams, or Apple stock. You also couldn't put it in the SP index. It's not often talked about, but one reason Berkshire Hathaway has so much cash is that they can't buy the SP index or more Apple stock because they would go over a 40% covenant, which is a limit set by the SEC 40 Act. If a company has more than 40% of its liquid assets in security, they would have to sell some of those assets. The company can't take on debt or give out options anymore because it's not a running company. This pretty much ends the business. You turn into a trust for investments. Because of this, running companies are required by law to hold on to their extra capital for 100 years, or 80 years, in an asset that loses 5% of its buy power every year. When 2020 came along, we were pushed into the Bitcoin space, but there are 3 major flaws that make it impossible for a company to trade bonds for Bitcoin, or put Bitcoin in and bonds out. The first thing you need is for the SEC to approve it as a real asset class or institution, a digital good, and not a security. The reason is that owning Apple stock is against the law, and it's for sure that you don't want an unauthorized security. That's why we had to start with digital goods, and in January we got about 75% of the way there. This is not a perfect recommendation. It's an uneasy support with some reservations. You can't go back once you've crossed the event line. Fair accounting is the second thing that needs to be done. Putting money into something that you always lose money on is not a good idea. It's pretty easy, right? No one wants to put money into something that will always lose money and never make money. Things were different before January though. In Bitcoin, you could only lose money. So no one will buy something that is always written down and never written up. So that was fixed, and you can choose to do so in January. That's what fair accounting must be in January of next year. That's the second stool, the leg of the stool. The third part of the stool is that Google can send JP Morgan $1 billion every month and tell them to put it in T-bills. The whole process takes about 15 seconds, and if JP Morgan loses the money, that's their problem. At the moment, Google would have to send $1 billion a month to Coinbase while the SEC tries to shut down Coinbase. They would also have to go through the only bank that will accept the wire. It's not likely that Google's CFO will want to send billions or even tens of billions of dollars to a cryptocurrency market to be held there. They want Citigroup and State Street. Citibank took over from National Citibank. John D., Rockefeller's brother, ran North American Citibank. It was the Rockefeller Bank. To give you an idea of how long these ties last, 30 years is not very long. The third thing we need is for banks to be able to store Bitcoin. They should be able to buy, sell, and lend money against Bitcoin. In that case, you would be able to get a margin loan at SOFR plus 50 basis points against your Bitcoin. Most likely, you'll get 5% interest. The interest rate on Bitcoin is likely to be the same as the rate on a money market fund, and if you had those two things, a business, it's like having $100 billion worth of Bitcoin go up 20% a year, earn 5% with no risk, and have a bank that is too big to fail take care of my headaches. One thing Apple might say is, put $50 billion into Bitcoin, that third thing is not here. It's almost the first year. You could call this the first year because the third thing and the support without bias come in the first year. After 6 months, there are now 50,000 companies that are traded on the stock market. All of them are based on bad credit, which is now falling apart. In my speech, I talk about how if you build your business on a capital asset that has a 10-year useful life, the business will last 10 years. This means that all of these businesses have a 10 to 20-year lifespan because they own bad capital. The reason they switch from stocks to Bitcoin is that Bitcoin can be used for 10,000 years. If you take care of it yourself, the cost of upkeep is like 1 basis point. Bitcoin will be useful for a very long time. A bond can be used for 12 years or 20 years. Because of the legal hurdle, big businesses and institutions don't do it because it's too much work. 2024 is the first year. The reason they're slowly getting into it now is that you can finally kind of do it. Right now it takes a lot of work to figure out who you're going to custody with and how you're going to buy it. Because you're working hard, you can get it for $65,000. It will be simple and cost $500,000 when JP Morgan and Goldman Sachs do it. That means you save 85% if you do the work. You take some risks. You would have saved 98% if you had done it in 2020. You could save 99.8% if you came in 2013, but it was a lot riskier and took a lot more work. It seems like a lot of these companies are willing to buy $10 billion worth of Bitcoin if they can just pick up the phone and say, buy it. If it takes more work, they'll study it for 3 years and then decide not to do it because they don't want to take that chance. So now we're in that change. It's hard to do business, like starting a business or making it bigger. It's hard to invest. When you look at every public company, you try to figure out whether their stock is worth more or less based on their expected cash flow. That's tough. It's not hard to say that the company is good, but it is hard to say if the current stock price is a good time to buy. It's hard to invest. Under the cash standard, it was hard to save money. But under the Bitcoin standard, it's easy to say, I have some money, I'm going to hold on to it for 4 years. Should I buy Bitcoin and hold on to it for 4 years? It doesn't matter how volatile it is. After that, business is tough. There's something going on in the world that makes me wonder how anyone can sell software to a company. If Microsoft does what they did with Slack and Zoom, they will take your Slack and turn it into Teams. They will then offer you a 3-year business deal that you have to buy. Also, they'll add Zoom to Teams and charge you for it for 3 years. You have to buy it. And a business could leave the US without much trouble than it could leave Microsoft. It's not that different from Apple, right? How many people really want to get rid of their